For more on all things that's happening around the world, John Quelch, professor at the University of Miami's Herbert School of Business. Good to see you again. I almost don't want to have this conversation, but I think we have to. What Yellen said yesterday scared the markets because she basically said that there wasn't going to be, at least in the near term, any changes to the deposit insurance, which was the primary reasons why people were pulling their money out. Today, she signaled that, well, maybe she could do more. Why not just say we're going to double it from 250 to 500,000? Let's just be explicit about what we want to do, not implicit.
I think the problem, Phil, is, and good to be back, good to see you again. The problem is that that is really a reaction, a one-off reaction that could trigger further one-off reactions down the road. If you switch from 250 to 500, why not from 500 to a million? And so it goes on. And it doesn't really help, in many cases, small businesses and medium-sized businesses that necessarily have to have more than that amount on deposit with financial institutions. And it's obviously inconvenient for those businesses to split up their money across multiple institutions. That causes additional administrative costs in the management of their funds flow. So one other point I think that John mentioned in his package a moment ago that's important is the magnitude of these uninsured deposits. So I'm not sure what the change would be in terms of trillions of dollars of additional insured deposits that would happen if we followed the 250 to 500 proposal that you mentioned. But it was stated that there is something like $19 trillion worth of uninsured deposits in banks in the U.S. There are over 4,000 banks in the U.S. And if the federal government were to insure all of those deposits, I can assure you that the magnitude and severity of regulatory control over those banks on behalf of taxpayers
Look, John,
greatly increased.
I get it, but in fairness, 15 years ago during the '08 Lehman Brothers crisis, the government did step in. That guarantee used to be 100,000. Now it was 250 post that financial crisis. I don't think it's unreasonable to say, look, we're going to increase it to $500,000, which essentially covers like 96 or 97% of all deposits in the United States. It would give a stamp of calm to this crisis, and if your goal is to prevent a further crisis, this is a first step, and we already have precedents that was done 15 years ago for this exact same reason. If the people don't pull their deposits out, we don't have a banking crisis.
Right, so 2 points. First of all, I don't think this situation is analogous to 2008 in terms of its severity. And secondly, as most consumers are easily finding out, it's possible if you're a married couple to have 2 single accounts and 1 joint account in the same institution and have $1 million of deposits covered in that institution. So it's not as though this $250,000 limit is a per household limit, it's a per individual account limit, and there are multiple ways on the books already to enable high net worth consumers who want to hold a lot in cash in a particular bank to do so and still remain insured. I think the key here is the regulatory oversight and the problems associated with supervision that allowed these banks, particularly Silicon Valley Bank, to get into a situation where they were taking in so many deposits so quickly and parking those deposits in treasuries with low interest rates. And so when it came to the point that the depositors wanted to withdraw their cash, they were having to assume huge losses on the sale of those treasuries. And it's that kind of regulatory oversight that I think has to be tightened up. in line with the regulations that existed before the Trump administration loosened them in 2018.
Right, okay, but in fairness, no one's disagreeing with this. Everyone is saying that supervision failure was part of the cause, along with management failure at Silicon Valley Bank. And the problems at Silicon Valley Bank, as the chairman rightfully pointed out, was it was an outlier, right? That's exactly what they said, was it was an outlier. And so why not fix the situation so that the other good banks aren't going to be punished or being unfairly tainted and discriminated against just because they're smaller and because of this deposit situation? I don't want to belabor the point, but I'm just saying all the banks aren't the same.
That's precisely correct, and that's precisely why the change that you're proposing, I don't feel, is necessary, because the Silicon Valley Bank had over 90% of its deposits uninsured. It was a very tight community of depositors, and as soon as the word got out that maybe there's a problem at SVB, there was a Twitter storm among all of those tech entrepreneurs who immediately attempted to pull all of their money out, and $42 billion was pulled out of the bank in one day. And that is a unique outlier situation.
Professor, I want to talk to you about the economy. We obviously saw the 25 basis point increase. A lot of talk about what happened in that interview with Chairman Powell. It seemed to me half the people are happy, half the people aren't happy. One, did he do the right thing? Two, what happens next?
Number one, he was, I'm sure, prepared to go to 50 basis points, but the behavior of the management of Silicon Valley Bank, ironically, caused a tightening of the credit market automatically, such that only a quarter-point increase was necessary. Ironically, the CEO of Silicon Valley Bank effectively saved the nation from a quarter-point increase yesterday. Now, what's going to happen next? There is a lot of uncertainty as to whether or not the inflation is going to tumble this year, as some people expect, or whether or not it's proving to be consistently stubborn, and we're going to have at least a couple more 25-point rate increases to try and tame the beast.
I don't have time to argue about this. My personal feeling is the rate increases aren't the only medicine to fight inflation, but it feels like it from at least the media's perspective. That's a conversation for another time. Professor, always good to have you on. Thank you.
Great to see you, Phil.
All right.